Hello, Future Millionaire. Now, in this part of the video, I want to address the downside of the coins that you're purchasing. And particularly, I want to compare BTC versus BCH. For a normal investor, they think, oh, what's my downside? My downside is 100%, which means you think your downside is whatever money you put in and the money is gone. It is technically correct. But in reality, if you want to analyze an asset class, that is not the correct way to look at it. Because whether you, particularly you yourself, participating in the asset class or not, has actually no effect on the actual statistical risk of the asset. I know this is hard to understand, but stay with me. Think about this way. What is the risk of Bitcoin? So if you look at it from a holistic perspective, Bitcoin is a store of value story. So the risk to them is that the store of value story get destroyed, which just happened, and they might lose the entirety of the market cap. In this case, is $720 billion. So the downside risk to Bitcoin BTC network is actually $720 billion. Whether you own part of the $720 billion or not, that is actually irrelevant. That's completely irrelevant. The Bitcoin Cash network, now on the other hand, the size is about $13 billion. So the actual downside risk is the question of how much of the $13 billion is allocated to store of value story, how much is allocated to future growth, how much is allocated to global currency and other things. I dare to say that of all other aspects of the Bitcoin Cash network, they are currently all valued at zero. So you have no downside risk on that. The only downside risk you have with Bitcoin Cash network is the store of value story, same as the BTC network. So the worst case scenario is you will lose $13 billion worth of store of value story in the BCH network. And now, whether you own the BCH or not owning the BCH is completely irrelevant. The BCH network doesn't care who is the owner of each particular part of the network. Because don't forget, what you actually own is just the key, the access code to the blockchain. The blockchain is not in your wallet. The blockchain is on the internet. The blockchain is there regardless if you own part of that key or not. So this is a huge difference between the way how you look at things from your perspective and how the market look at things from their perspective. And I urge you always look at everything from the perspective of the market participants, not just from your perspective. Yeah. So all the people who have not bought any crypto yet, they come into the market, they evaluate the situation, they look at the downside risk, and they should be able to understand that BTC has only the one upside, which is the more store of value. There's nothing else out there. More store of value. The downside risk is all the store of value is replaced by something else. Now on the BCH network, we have the upside of the payment system, we have the global cash and other things. None of that is valued at it for anything right now. Therefore, you have no downside risk on those things that's valued at zero. The only downside risk is the $13 billion in store of value story. And that, however, is a fantastic story because when people look at the store of value story between BTC and BCH, they will see quickly that it is far easier to store value in the BCH network than the BTC network. If you don't believe me, just try this. Can you store 50 cents on the BCH network? Yes, you can. But can you store 50 cents on the BTC network? No, you can't. Because if you want to store fresh 50 cents or $1 or $2 for that matter on the BTC network, you can't even get into the network because the fee is so high. On the other hand, you can store as many times as a 50-cent store of value unit as you want on the BCH network. In fact, in the future, the fee will even go lower. Why is that important? Because you are only looking at it from your perspective, but I want you to broaden your horizon. Think from the perspective of Internet of Things. Think about the smart electricity meter that needs to pay the utility company, and maybe there's only 20 cents each day get paid. So if you have that same system on the BCH network, you can make that payment. But if it's on the BTC network, you can't make that payment. The same thing goes for Ethereum. You might have your smart contracts going on, but how often can you execute those smart contracts? If the fee is too high, you can't execute them. The fee is so underappreciated as part of the entire narrative. I still cannot believe that so many people don't look at the fees from the perspective of the future. Everyone look at things only from the perspective of the past. Yes, so far not many people using BTC to pay for anything, but soon enough you want to pay something with the BTC. You are not going to do a conversion every time. You want to make direct payment. So when that happens, you have a brutal competition out there. And the number one competitor with same heritage, same supply issue is BCH. And in every possible payment system competition, BCH wins hands down. So the downside risk for the BCH network is only 13 billion. The downside risk of the BTC network is $720 billion. In fact, every single day so far, the BTC network lose or gain far multiples of that of a BCH network. That tells you how risky the BTC network is. So any person who is a risk-averse investor, you want to limit your downside. And the real way to limit your downside is choose the network wisely. I would choose to stay with the one with less downside any day of the year. Okay? So this is a super important concept most people truly don't understand. And if you watch this video, you understand what I'm talking about, then you are the top 1% straight away. No exaggeration. Truly. Think about what I just told you about. The downside risk. Think about it. All right? See you in the next one. Bye.